Here I am in India, having a look around, getting a feel for things and seeing how things operate. And in this video, we're going to have a look at India. We're going to take a bit of a basic summary of its geopolitical situation, its economy, how to invest here, its manufacturing sector. And at the end of the video, we're going to look at if you do want to get involved in investing and capitalizing on India's future, then how can you do that? Aaron here from Offshore in Asia. So if you're interested in moving your life, your money, your business, your investments out to Asia and you want to know how to do it in the most optimal way, if you want help with that, setting things up, we can help you do that. So head over to offshoreinasia.com, have a look around and you'll find some other resources there that might be of use. India has a massive population. Currently about 1.4 billion people live here. And the estimates are, if it hasn't already, it is very close to overtaking China as the world's most populated country. There is huge potential here to be harnessed, but it's not without its challenges as well. Now on the world stage, as far as geopolitics goes, India sits in a very interesting position. It kind of almost has a foot in both camps. On one hand, it's a member of the Quad group, and on the other hand, it's a core member of the BRICS group. So the Quad is short for the Quadrilateral Security Dialogue, and this is a group of 4 countries that are Australia, India, US, and Japan. And basically they hold talks on a periodic basis where they get around the table and talk about various security issues with each other. So this is very much a pro-US, pro-Western group here. The US and other major Western countries are very keen to promote further ties with India and more investment with India. It's basically all about providing a counterbalance to the rise in dominance of China and looking to have more friends in the region that they now refer to as the Indo-Pacific rather than the Asia-Pacific. On the other hand, India is also a core member of the BRICS group. So the BRICS is of course Brazil, Russia, India, China and South Africa. They're the core members, but there is a big waiting list of other countries that want to join the group in what they're basically calling the BRICS Plus group. Now being a core member of BRICS is very interesting because BRICS pretty much is like the anti-US major sort of international group out there. A lot of countries here who are very interested in creating a new reserve currency for the world that is not the US dollar. They look at what happened to Russia with freezing of reserves and the weaponization of the monetary system. They looked at the freezing of reserves in Afghanistan when the US left there. And that scares a lot of countries. So they're very interested in developing alternative financial systems, alternative ways of trading that doesn't have to go through the US system, that the US can then more or less switch off, cut you off if you do something that they don't like. So it's very interesting here that India is sort of straddling both of these groups here. They've got a foot in both camps. It's probably a smart play for now, but how sustainable that will be into the future if tensions rise between US and Russia, for instance, we'll have to see, because India does import a lot of oil from Russia. Currently about 25% of their oil imports come from Russia. So obviously that's something that the US probably isn't very happy with, but you know, India is the kind of country, they're coming up, they have money, but they still have a lot of poverty, and they're not really in a position to be putting sanctions in place that will potentially backfire on their own people as well. So they got to do what they got to do to get ahead. Now moving more into the economy here, India is expecting GDP growth of about 5.5% this year, and last year they had about 6.8%. Over the last 20 years they've averaged around 6%, so that's pretty strong on a fairly consistent basis, as you would expect for an up-and-coming developing nation.
The Indian national gross domestic product is not quite 3.5 trillion, but that still makes them a very large economy. They're currently the 5th largest economy in the world. They're behind Germany, but ahead of the UK, but they're still a long way behind China and the US.
When you look at GDP on a per capita basis, it tells a very different story. They're about 139th in the world. So that just goes to show that they have a huge population, but also they still have large amounts of poverty. On to manufacturing now, and India's biggest export partner is the US by a long way. The US currently accounts for about 17% of all of India's exports. Their #1 export is refined petroleum. A lot of that cheap oil coming in from Russia and then getting refined into petroleum for export. Also leather, footwear, car parts, rice and jewelry are large exports for India. A big one that a lot of people will know about is the pharmaceutical industry. It's about $12 billion a year. They currently export to 200 plus countries. India currently produces about 40% of all the generic pharmaceuticals that is used in the United States and about 50% of all generics that are used in Africa. Now, as many multinational companies around the world are looking to diversify to an extent outside of China due to political risk, the risks of lockdown during the pandemic that basically brought supply chains to a standstill. But also, it's getting more expensive to do things in China. It's not as cheap as it used to be. Wages are more expensive, rent in warehousing, everything has become more expensive as the country has developed, as you would expect. Now, one of the beneficiaries of diversification outside of China is India. And an example here is Apple. Apple currently manufactures between 5 to 7% of its iPhones in India. And they've come out and said publicly that they want to increase that to about 25% of all iPhones being manufactured in India. Now, that's a huge play for India. It means they can pivot into more high-tech industries. There's going to be more skills, more knowledge coming into the country. Now, India has many states, and with that it has many stock exchanges, but the two main ones are the NSE and the BSE. The NSE is the National Stock Exchange of India that's based in Mumbai. It's the world's largest derivatives exchange when measured by the number of contracts, and it's the fourth largest in cash equities when measured by the number of trades. And the other one is the BSE, the Bombay Stock Exchange. Now, this is the oldest stock exchange in Asia. It was established in 1875, and it's the seventh largest stock exchange in the world, with a market cap of around $3.5 trillion. So whereas the NSE, the National Stock Exchange, is probably the preferred stock exchange for derivatives trading, the BSE is the preferred exchange for equities and shares trading. Now, the Nifty 50 is one of two main stock market indices in India. It measures the weighted average of the top 50 companies by market cap on the NSE. The other main indice is the BSE Sensex, the Bombay Stock Exchange Sensitive Index. Now, this one is the weighted average capitalization of 30 well-established companies on the BSE. So not necessarily the largest 30 companies, but 30 well-established companies. It's regarded as the pulse of the domestic markets. It's supposed to give a pretty good indication of the overall view of the economy. Now, if you're looking to come to India to set up a business like an import-export thing or something like that, you're definitely going to want a local partner here. You're going to need someone to help you navigate the bureaucracy, the customs, the Indian way of doing things. And if you came here on your own as a foreigner, frankly, you're going to get ripped off left, right, and center. So you really need someone on the ground here who is a local, who you trust. Now, for investing in the stock market, foreigners can invest in India under certain conditions using a foreign portfolio investment account. You're probably going to have to also register for a PAN card, which is basically a registration number with a local tax authority. But for most people, the easiest way to invest in India will be by buying an ETF on their local stock exchange. So most major stock exchanges in the world, the New York Stock Exchange, London Stock Exchange, the ASX, whatever it may be, most of these exchanges will have ETFs that allow you to invest in India. So that way you can pay them a management fee and you can earn some dividends or some growth from owning companies, probably blue chip companies in India. That will be the easiest way to do it for a lot of people. It may not offer the biggest returns, but it will definitely be the safest and the surest way for a foreigner to invest in India. Okay, in summary here, guys, India does have huge potential, but it also has massive challenges. Just being here on the ground myself, having a look around, some parts of the country are still a long way behind. There's massive poverty here. They still have the caste system, which could create complications in staffing your business. There is massive overcrowding in some parts, lack of systems, lack of infrastructure. A lot of work has to be done to bring things up to scratch. On the plus side, there is a huge population and a huge population of hard workers. Indians have a fantastic work ethic. A lot of people have been brought up in a situation where they have to work to survive basically, and they've carried that on throughout life. When they've moved offshore, there's a large Indian diaspora all around the world who have done very well for themselves because they have a very strong work ethic. India is a secular country, it's open to the world, they're open to Western concepts, they're very friendly. When they meet you on the street, they want to know about you, know about your life, about what you do back home. As I just mentioned, there is a large Indian population living overseas, studying overseas, setting up businesses, making connections, but also sending skills back to India, sending knowledge back to India, and of course money back to India. For the younger population, and particularly in the more urban areas, they have quite good English, so they're definitely sort of studying, learning, getting ready to engage more with the outside world. So it might take some time, but India does have huge potential. It's all about harnessing that potential by having the right policy settings, the right incentives, the right investment to take India to the next level. Because if they get all those things right, there is no doubt that in sort of 10, 20 years time, India definitely can be a global superpower. Anyway, that's it for the video, guys. I hope you found it interesting, and hopefully it encourages you to go out and learn a little bit more about India, and maybe you come out here and visit for yourself, have a look around. It really is a very interesting place.